The uptrend remained in progress today. Note how the Dow is not only trading above the T line, but trading above the 3T line, which still exhibits very strong bullish sentiment. It did do a doji in the overbought area, so there might be some profit taking, but as of now, until there is a confirmed sell signal, meaning selling after the doji in the in the Dow, we have to assume the uptrend remains in progress. The NASDAQ is showing a little bit more strength in the sense that it consolidated back to the T line and still trading positive. Anytime you see this consolidation during the uptrend, it basically tells you there's no exuberance in this trend, just a steady uptrend. At this point, we want to stay predominantly long because not only is there a no sell signals being confirmed, but the indexes are continuing to trade above the T line. Being long or short in a position is very easily assessed. As you can see in soybeans, we had a bearish engulfing signal right on the 50-day moving average. The 50-day moving average had acted as resistance before. When it closed below the T line, you could short soybeans because of one very simple principle. You stay short until you see a buy signal and a close back up above the T line. Tesla remains a strong chart because we could identify the fry pan bottom that also supported right here at this support level with stochastics in the oversold area. But here was the alert. Notice how they opened here and closed here. The next day they gapped above where they opened the previous day and went the opposite direction, giving you a trend kicker signal, breaking out of a fry pan bottom. Now we've had kind of a double doji setup, which essentially tells us that as long as the pullback is occurring, it's doing it indecisively. That's what the dojis tell us, that there isn't conviction. The fact that they gapped it up again today through the resistance level of the 200-day moving average is a good prospect that Tesla is going to move higher. Knowing what should happen after a candlestick pattern, such as a big fry pan bottom as we see in web.com, notice what it did today. It did a gap up through the 200, which was also the beginning of the fry pan bottom. And what do we expect coming out of a fry pan bottom? A very strong price move. So identifying the patterns and knowing what should happen at the end of those patterns allow candlestick investors to not be deterred by the fact that, in this case, being in the overbought area, it's telling us that the investor sentiment that built up from this pattern is now breaking out to the upside. It is a very simple process to identify signals. There's a long-legged doji followed by bullish confirmation. Our buy on EYE was based upon this big reversal. And then how long do we hold this? Notice what it hasn't been able to do during this uptrend. It's never been able to close below the T line. The benefit of the visual aspects of candlestick analysis allows investors to get emotions out of their trading, thinking, all right, I got a good profit, I better take it. The charts tell you when to stay in and when to get out of a trade. That'll be it. We'll see you in the chat room.